Hello, welcome back. So the market in the US hasn't opened yet, but Alibaba was actually up about 6% in Hong Kong earlier today. And this is why you're looking at the 6% rise right now in the US. Now, in this video, we're going to be taking a look at what happened, examine Alibaba in a little bit more detail, and talk a little bit about the recent earnings report and what we're expecting of Alibaba in the upcoming months, I suppose. So let's first take a look at what happened with China today, because you will see that the stocks in Hong Kong jumped about 4% as China's factory activity reading hits highest level since 2012. Again, something that's kind of to be expected eventually because the whole economy in China has been so suppressed that you have to have some of the highest levels right now eventually. Now, you can kind of see here in our tool, of course, I'm using our Investors Heaven tool here, for which all our Patreons have access, by the way. If you're interested, you can find a link in the description box below this video. But you will see that in the past month or so, this is the 1 month chart, the stock has been going down quite significantly. It almost reached 125 at some point and then started going down and down, along with the Chinese market again having a downturn. Now today we're looking at about a 6% rise, maybe going back to 100. We'll see whether that's going to be the case. But let's first take a look at what happened over here. So Asia Pacific markets mostly rose as investors digested a slew of key economic data across the nation here, across the region. And they reported that their manufacturing index pretty much rose to 52.6%, which basically means that the economy is sparking again. And so this is obviously pretty good news for the investors and stocks and businesses pretty much. And so this is why we saw a 4% increase over here. Now, in terms of Alibaba, you can kind of see here there has been tons of discussions. StockTwitch is one of the resources that I follow because there's a lot of news pieces coming out over here, and you can potentially discover some news before they become very well known. So if you are not into this website, you probably want to join and take a look. But I was taking a little bit of a closer look at some interesting articles here, talking about various things around Alibaba, various points around Alibaba, which I kind of wanted to take a look at. Now, we did create a video that was about a week ago or so when Alibaba had its earnings report. I will actually link to that video at the end of this video in case you haven't watched it. But we discussed the earnings report, and they were very solid. And as you'll see here, it's what the article mentions. They reported solid third quarter results and could not only beat revenue and EPS estimates, but could increase operating income and the bottom line again. Now, we do know that some risks still loom. Yes, for sure. There are some political issues. We don't know whether China will be going back to normalcy anytime soon. It may take a while. But overall, it's still a great business. And as you can see here, it has a wide economic moat. And it's understandable that it may still take a while to go back to normal. But if and when it does, I think that this has a great chance for Alibaba to flourish here, the business. Now, even when being cautious about Alibaba's margins and growth potential, the stock is still deeply undervalued, is what the article says, and I pretty much agree with this one. And then it goes and talks a little bit about some important facts here. I wanted to point out the share repurchases, which is what we should be focusing as investors, and especially investors who are either looking to buy now or have already bought, because Alibaba has been continuing to buy back shares. In the third quarter, the company repurchased 45.4 million ADSs. That's the depository shares pretty much, and this is the equivalent of 363 million ordinary shares. And the number of outstanding shares decreased from 21 billion over here, diluted outstanding shares to 20.9 diluted shares. So this is very interesting here. This is something that we really care about because it actually makes our stock more valuable, the current stock more valuable. Now, the Q3 earnings display shows the cash cow potential here for Alibaba, which is another thing that we know about. And the article again mentions that they have been doing for 45 million share repurchases here, but they are also a significant free cash flow generation machine, as you'll see. Continues to enhance its liquidity position and give flexibility to invest in growth segments such as Alibaba Cloud and Cainiao. And Baba workforce reduction and cost optimizations deliver improvements in net income and liquidity, which is something that is also pretty important here, sort of like tightening the business pretty much. Again, an article that talks a lot about the financials of Alibaba. I kind of wanted to point out that the cloud is a little bit underperforming so far. So compared to what the other businesses of Alibaba have been doing. But again, shareholder returns we're deeply interested in this one because the company has been buying back tons of shares, and also they are reducing the workforce and optimizing costs, which is exactly what we want to see when the economics are tightening, of course, in China and worldwide. And they have laid off workers, a lot of workers actually, and trying to reduce their costs. And this is, although this is obviously bad for the people that have been laid off, as an investor, you kind of like to see that from the sense that the company is actually tightening its financials. And generally speaking, it's something that's good to see. Now, they are reducing research here and development as well as sales and marketing expenses by about 20%. So again, tightening is something that investors typically like to see, especially when we're entering a phase of, the whole economic climate tightening pretty much. And this article claims that we haven't seen anything yet. We'll see about that. We definitely haven't seen anything yet in regards to Alibaba because it's been going up and down quite a lot. Significantly, it's like a roller coaster here. One month is like 120, the next month is like 90. So this is exactly what's happening with Alibaba for the past in the past few months. And this article claims that Alibaba potentially goes back to growth. And this is something, again, that we talked about when the earnings report came out with a bit. So we're kind of anticipating Alibaba to keep doing well and keep doing better than what they were doing in the previous quarters, which were a little bit of a disaster. Things are looking much, much better, significantly better lately in regards to the business, pretty much, of Alibaba here. And the bigger picture here, some interesting points that the article makes here: the fact that China's own central bank digital currency, called the Digital Yuan, continues to gain traction and extend its reach. And the article mentions that this is a potential existential threat to the Ant Group business, in which Alibaba holds a 33% stake. Interesting to note this one. Now, secondly, Alibaba's cloud business also continues to disappoint investors. Yes, at the time when Amazon, for example, is able to grow their cloud businesses, and Alibaba is not doing that well in that front yet. And this is obviously something that we do want Alibaba to do very well, being a cloud business and being a business that will potentially have pretty high margins. And last but not least, there is risk that the pressure against owning the Chinese stocks of Chinese-based firms would not ease anytime soon. Yes, absolutely. Tons of things happening right now. Geopolitical risks, risks in regards to the US themselves, risks in regards to Russia lately, Taiwan potentially. Lots of risks here. The actual, government, the Chinese government, also another risk, as you can understand. So Beijing themselves is a pretty important risk. And also there seems to be a little bit of a war between the US and China. Not an actual war, but a war in regards to financials and economics, pretty much, as you are looking at lately, with things that have been happening with the whole espionage things, with balloons and all that, and potentially some bans that we are looking to see in the upcoming months or so. The military assistance to Moscow and all that are definitely adding to the risks that we have from that region. But again, for the long run, I think this is still a fantastic opportunity here, especially at this current valuation that the stock is at. Now, yeah, we do know about these risks. We have talked about Alibaba in previous videos, of course. We have analyzed the financials. You can see that they have been pretty great. And sure, they have had a couple of quarters that haven't been the greatest of all. But if you take a look at our stock evaluation tool, which is obviously what matters at the very end, we kind of want to see how Alibaba would potentially grow in the upcoming years, pretty much. And even though they are, free cash flow hasn't been doing greatly lately, their revenue still increases, and it's nice to see. But if we anticipate a potential increase of, let's just say, that the revenue growth of the company increases at like 5% or 7% or 9%. So this is the low value, the low projection, the medium projection, and the high projection for a potential revenue growth of Alibaba the Alibaba revenue that is in the upcoming years. And the net income margins, again, Alibaba has, generally speaking, been doing better than what they have been doing lately. So we do anticipate that they will be near 20%. However, I will try a little bit lower, like 15, 17, and 20, just to see what kinds of values we're getting there. And for our free cash flow margins, something like 90, 100, and 110 makes sense for Alibaba, and 13% for our annual return. And hitting calculate, you will see that we are very, very solidly in the green here. And even our lowest projections, we have talked about this for a while now. we are still solidly in the green, even as Alibaba approaches about $115. We are still solidly in the green with these kinds of very subpar projections here, very, very conservative projections, which I think they will easily be fulfilled in the upcoming 5 years. So yeah, there are risks about the company. We have talked about them. Again, we have talked about them quite significantly in previous videos, but still, as the market is opening with about 4% right now. So it tends to go down when it opens up in the US. As I'm making this video, it is now when the market is actually opening up. And so, yeah, we're looking at a little bit of a decrease right now, a decline. But overall, again, the company is potentially an interesting hold for the upcoming months and years, more importantly. So thank you for watching. Let me know what you think about Alibaba and what kind of price you're expecting to get maybe at the end of this year or so. That would be interesting to discuss. And thank you for watching the video. If you did enjoy, please remember to leave a like and subscribe, and I'll see you at the next one. Bye-bye.